Welcome back, everybody, for another deep dive. This time, we're going to be tackling Bitcoin through the lens of Saifedean Ammous's book, The Bitcoin Standard.
Mm.
And he makes a pretty bold claim in this book, arguing that Bitcoin is, not just some digital fad, but a potential game changer,
Right.
maybe even the biggest shakeup to money since the gold standard. So,
Yeah, it's a really interesting book for sure.
yeah, before we even get to Bitcoin itself, though, I'm kind of curious. How did we even get from like trading chickens at a marketplace to, tapping our phones to pay for a coffee? How did we get here?
Well, I mean, it all starts with bartering, right?
Better.
Like that's the most basic form of exchange. You have something I want, I have something you want, and we just make a deal.
Right, but I can imagine that getting really complicated pretty quickly. Like, what if you have a cow and you just need a haircut?
Mm.
It's not exactly an easy swap.
Exactly. And that's why, that inherent inefficiency of bartering is what kind of pushed societies towards something better. And that's commodity money. So, things like salt, cattle, even those giant stone discs they used on the island of Yap.
Giant stone discs. Okay, now you have to tell me more about that. Were those like the ancient Bitcoin or what?
Maybe we'll save that story for another deep dive. But
Yeah.
the point is that these commodities became valuable as money because they shared certain key traits, right? Like they're all durable, they're portable, they're divisible, but most importantly, they were scarce.
Okay, so that brings us to gold, right? Like,
Right.
that's the OG of sound money.
Yeah.
It's been valuable for thousands of years.
Exactly. And gold checks all those boxes, right? It's relatively scarce. It's held its value for centuries. You can divide it into smaller units. It's transportable. And that's why it became the dominant form of money for so long. Ammous spends quite a bit of time in the book talking about the classical gold standard, roughly from like 1870 to 1914, and how it led to a period of relative economic stability.
But that didn't last forever, obviously. The 20th century was a pretty big shift.
Yeah, and World War I put a huge strain on government budgets, and they needed a way to fund the war effort. So this led to countries abandoning the gold standard and just printing more money, which essentially decoupled money from any tangible asset.
And that is the origin story of what we use today, fiat currency. Dollars, euros, yen, you name it. It's all fiat, and it's all backed by the government's promise, not by actual gold. And you know what? It seems to work. I mean, we all use it every day.
Right, but Fiam, and he's drawing on ideas from the Austrian School of Economics here, he argues that this decoupling from gold has had some pretty serious consequences, and we're seeing those consequences play out, especially now with inflation.
Okay, so before we go any further, can you quickly explain what the Austrian school is all about for those of us who aren't economists?
Sure. So at its core, the Austrian school is a school of economic thought that really emphasizes things like individual freedom, limited government intervention in the economy, and the importance of sound money. They're very critical of central banking and the manipulation of the money supply, which they believe leads to instability.
Okay, that makes sense.
Yeah.
So back to Amos's critique. He's saying that because fiat currency isn't tied to a limited resource like gold, it's prone to, inflation,
Mm.
and that erodes the value of our savings over time.
Exactly. One of the most striking examples that he gives in the book is the decline of the U.S. dollar's purchasing power. Since 1913, the dollar has lost over 96% of its value. Think about that. What your grandparents could buy with a dollar back then, you would need over $25 to buy today.
Yeah, that's a pretty stark illustration of how inflation eats away at our wealth.
Yeah.
It makes you realize that money illusion is a real thing. We think about money in nominal terms like, oh, I have $100, but what can actually buy you has been shrinking.
Yeah, and that's a key takeaway from the book. Amos wants us to really think critically about the concept of sound money. He argues that money should be a reliable store of value, something that maintains its purchasing power over time. And he just doesn't believe that fiat currencies are up to the task.
Okay, so if the problem is fiat currency and central banks, what's the solution? Is that where Bitcoin comes in?
That's exactly where Amos takes us. He sees Bitcoin as a potential way to return to a system of sound money, but in the digital age. But, to understand why, we need to take a closer look at how Bitcoin actually works. What makes it so different from those traditional currencies?
Okay, so we've laid the groundwork, talked about the history of money, and explored Amos's critique of, the current fiat system.
Yeah.
But let's get to the heart of the matter here, Bitcoin. To be honest, I still get a little lost in all the technical jargon, so can we break it down? In a way that even I can understand.
Absolutely. So at its core, Bitcoin is a digital currency, but what makes it unique is the technology behind it. It's called the blockchain. Imagine like a giant digital ledger a record of every single Bitcoin transaction that's ever happened, and it's accessible to anyone.
Okay, so instead of banks keeping track of our money behind closed doors, it's all out there in the open.
Yeah.
That seems, well, pretty radical. Is it really secure?
It is. That's the beauty of it. No single entity controls this ledger. Not a government, not a corporation, not even a group of like super hackers, right? It's distributed across a vast network of computers all over the world. And that makes it incredibly difficult to tamper with or censor.
Okay, but how do you make sure that everyone has the same record and that no one can just go in and, cook the books to make themselves richer or...
Right, and that's where the ingenious proof-of-work mining comes in. So basically, specialized computers, and they're essentially solving complex mathematical puzzles, compete to add new blocks of transactions to the chain. And the winner gets to update the ledger and is rewarded with Bitcoin.
So it's like a global digital Sudoku competition, and the prize is Bitcoin.
In a way, yeah. And because this process requires so much computing power, it makes it incredibly difficult and expensive for anyone to try to cheat the system. They would need to control more than 50% of the network's computing power, which is practically impossible, given how decentralized it is.
All right, so I'm starting to get the security aspect.
Right.
But how does Bitcoin stack up against gold? Remember, Ammous is arguing that this is sound money, like gold was for centuries.
Right, and that's a key point. So he argues that Bitcoin shares many of the same properties that made gold so successful as money, first and foremost.
Scarcity.
Right. You can't just create more gold out of thin air. It's a finite resource. Does Bitcoin have that same kind of like built-in limit?
It does. Bitcoin has a fixed supply capped at 21 million coins. It's written into the code, unchangeable. So just like gold, there will only ever be a certain amount of Bitcoin in existence. Interesting. So no matter how popular Bitcoin gets, there's a ceiling on how much can ever exist. That's a pretty big difference from our current system, where central banks can just print money whenever they feel like it.
Exactly. And this scarcity is one reason that Ammous believes that Bitcoin is a hedge against inflation. Remember the Cantillon effect. When new money enters the economy, it tends to benefit those closest to the source of creation, like banks and governments. But with Bitcoin, new coins are created through this decentralized mining process, meaning the rewards are distributed more evenly.
So it's not just that there's a limited supply, it's also about how that new supply gets created.
Yeah.
Okay, that makes sense. What else makes Bitcoin similar to gold?
Well, think about portability, right? Gold is fairly easy to transport, but you still have to physically move it around. Bitcoin, on the other hand, you can send it anywhere in the world in minutes with just an internet connection.
So it's like digital gold, but even easier to move around. No more armored trucks or bank transfers, just click and send.
Precisely. And that leads to another crucial property: censorship resistance. No government or institution can freeze your Bitcoin holdings or prevent you from sending them to someone else. This is particularly important in countries with unstable governments or strict capital controls, like, those examples we talked about earlier.
Yeah, that's a powerful idea,
Mm.
It gives individuals a level of control over their own finances that we haven't really seen before.
Oh.
But I know there are also concerns about this, right? Like people talk about Bitcoin being used for illicit activities because it's...
Yeah, that's true. Bitcoin's anonymity can be appealing for those engaged in, illegal activities, just like cash can be. But it's important to remember that the vast majority of Bitcoin transactions are perfectly legitimate. And in fact, the blockchain's transparency actually makes it easier to track illegal transactions than traditional financial systems, which are often much more opaque.
Oh, interesting. So it's kind of a trade-off then. The same features that make Bitcoin attractive for those seeking privacy also make it potentially more traceable for law enforcement.
Exactly. It's a complex issue, and Ammous actually dives into, the various arguments around Bitcoin's role in both legal and illegal activities.
Okay, my brain is officially full of Bitcoin.
Yeah.
This is all incredibly fascinating. But before we go any further, let's zoom out a bit and look at the bigger picture, What are the real-world implications of what Ammous is proposing here? What would a world where Bitcoin is the dominant form of money actually look like?
That's the million-dollar question, or maybe we should say the 69,000 Bitcoin question. Ammous paints a picture of a future with some pretty radical changes to our financial systems, a shift in power dynamics, and honestly, a whole lot of questions we don't have answers to yet.
Welcome back to the show. I'm very excited to continue this conversation all about Bitcoin through the lens of the Bitcoin standard. Now, Ammous doesn't just talk about how Bitcoin works. He lays out a pretty bold vision of what widespread adoption could mean, right?
Yeah. He paints a pretty compelling picture, actually. He argues that it could fundamentally reshape our world in some pretty significant ways.
Okay, so let's dive into some of those. We touched on the idea of individual empowerment before, but I'm curious if you could expand on that a bit. What does individual empowerment actually look like in, Bitcoin world?
Well, remember, one of the key things we talked about was Bitcoin's decentralized nature. That means no single entity can freeze your assets or control how you use your money. And this could be incredibly powerful for individuals, especially in countries with restrictive governments, unstable economies, or strict capital controls, right?
So no more worrying about your bank account getting frozen because of like some arbitrary
Right.
government policy or waking up to find your life savings wiped out by hyperinflation.
Exactly. Think about those examples we discussed, like Zimbabwe or Venezuela. In those situations, Bitcoin could offer a way to preserve wealth and escape the consequences of, those failing monetary policies.
It's interesting to think about how Bitcoin might shift the balance of power then, not just between individuals and governments, but also on a global scale. I mean, Ammous even suggests that Bitcoin could challenge the US dollar's dominance as, like, the world's reserve currency. That's a pretty big claim.
It is a big claim.
Yeah.
And it's definitely one of the most hotly debated aspects of his thesis. But his argument is that, Bitcoin's decentralized nature and that fixed supply we talked about make it a more stable and reliable store of value than a fiat currency that's controlled by any single nation.
So instead of relying on, one single country's currency, we could have this global monetary system based on this decentralized network. It sounds almost utopian, but I imagine there are a lot of challenges along the way.
Oh, of course. No system is perfect.
Yeah.
And I mean, one of the most common criticisms of Bitcoin is its volatility, right? The
Yeah.
price can swing wildly, and that can make it seem like a really risky investment.
Yeah, and I know some of our listeners might be thinking, isn't this whole Bitcoin thing just a gamble? How does Amos address that?
Well, he acknowledges that Bitcoin has been volatile, but he argues that it's kind of a natural consequence of it being such a young asset class. And as its market cap grows and adoption increases, that volatility has actually been trending downwards.
Oh, interesting. So he'd say, don't focus on the, day-to-day price swings. Look at the long-term potential.
Right. He believes that as Bitcoin becomes more widely accepted, its value will stabilize over time. And then another big criticism is the environmental impact of Bitcoin mining. All those computers crunching numbers use a lot of energy.
Yeah, that's a valid concern. Energy consumption is a big issue. What's Amos's response to that?
Well, he makes the point that traditional financial systems, with their sprawling infrastructure of banks, data centers, and physical currency production, they also consume a ton of energy. It's not a simple comparison.
Right, so it's not as easy as just saying Bitcoin is bad for the environment. You have to kind of compare it to the existing system, right?
Exactly. And it's also worth noting that Bitcoin mining is actually becoming more energy efficient over time as the technology improves. Plus, there's a growing trend of miners using renewable energy sources.
That's good to hear.
Yeah.
Okay, one last criticism I want to bring up. If Bitcoin is really so decentralized and resistant to government control, can't governments just ban it? We've already seen some countries trying to crack down on crypto.
Yeah, that's true. But Amos argues that Bitcoin's decentralized nature makes it incredibly difficult to just shut down permanently. There's no single point of failure, right? It's distributed across thousands of computers worldwide. So even if one country bans it, it can still continue operating elsewhere.
So it's kind of like a hydra. You cut off one head and two more grow back.
Yeah, resilience is built into the system. Of course, governments can certainly make it difficult to use Bitcoin, like imposing regulations, making it harder to buy and sell. But completely eradicating it, that's much harder to do.
Well, look, we've covered a lot of ground today, from the history of money to the inner workings of Bitcoin to, this potential impact it could have on our world. It's a lot to think about.
It really is. The Bitcoin Standard is a dense book. It challenges us to really rethink some of our fundamental assumptions about money and finance, that's for sure.
I think one thing's for sure, Amos definitely paints a bold and controversial vision of the future. Whether that vision comes to pass, we'll have to wait and see. But I think the conversation he started about sound money and decentralization and technology's role in finance, that's incredibly important.
Absolutely. And as with, any complex issue, it's crucial to approach it with a critical mind, weigh the evidence, and consider all sides.
So listeners, we'll leave you with this. If Bitcoin really does become, the dominant form of money, how might that change the world? How might it impact your own life, your finances, your relationship with money itself? These are questions worth exploring.
Keep learning, stay curious, and draw your own conclusions about the future of money in our digital age.
Thanks for joining us on this deep dive. We'll see you next time.